Hi, this is a quick video on behalf of $5signals.com, and today we are going to be looking at when we are most likely to establish the high or the low of any given day in the forex markets. This also works with stocks markets, commodities markets, other markets as well, but today we're going to focus mainly on forex. Now, if you've not already read it, Maria from $5signals.com recently posted a blog where she said the London Open can mark the high or low of the day around about 30% of the time. So let's have a look. I have split my chart into 8 AM to 8 AM, which is GMT, that would be London Open to London Open, and we'll just look through the recent days and we'll just go through the list in order so you can see I'm not pre-selecting the best examples. We are just looking at the facts as they are. So this is our first one. We've got the dollar yen. It makes the high of the day there and it falls. Again, the next day it's the low and it's went up through the day. This one, it's a bit tight because it's closed close to where it opened, but that was the high of the day. And this was a rubbish trading day, but that was the low of the day. So we've looked at about 10 days there and we've got about 4 examples. So that is over 30%. On the Euro USD, there's not that many examples recently. This was one. There was a spike through which stopped that being one. This was one. This was one. So again, that's around about 30%. I think this will probably be over 30% because this has trended very well. This works absolutely best in trending markets. So here we are. There's one. This is maybe one, yep, that's two, that's three. This would have probably been four apart from this spike through. This was probably news related. This looks like another one. This is another one. Have a quick look at gold, so you can see this is not just the forex markets. This is a general pattern you're going to see in most markets. There's the low, that's the low, that's possibly the low, let's spike through a little, and that's the low. So again, that's about 30% in the last 10 days. Now, once you know this information, it might be tempting for you to just say, well, I'm going to open a trade in London Open, and if it goes up, I'm going to be long through the day, and if it goes down, I'm going to be short through the day. And that sounds pretty nice in theory, but you have to remember, 70% of the time this isn't going to happen. So if you do this 100 times, you're going to lose 70 times. Now, if you've got good bankroll management and you've got good psychology, then this might be profitable for you, but it's not really the best system. It's not the best way to apply this information. What I like to do is I like to look. Now, you notice sometimes, if I've got something else which tells me that there is a support here, and the markets came up and it's broke through that support, It's tested it a few times and it's then broke under, and then we get these candles which sort of suggest that it's not going to break through again, and then that little engulfing candle. This might be somewhere where I'm selling based on other analysis, and based on this London open theory, I'm considering holding it through the day. So that works very well with confluence of other things, but even without this, we can use the time of day in this theory to get an idea of where the market might be going in the New York session. So what usually happens when this is true, that this has been high or low of the day, is we will see obviously the move in London. We'll see usually one or two candles, or three or four candles going in the line of the trend, and then in this case it was a consolidation. Quite often it's a little pullback and we make a new low. And if you look at the time here, this is around Chicago. So often you'll see it start to pull back around about 10 to 11 GMT. So you'll see it move in the one direction until 10 to 11 GMT, and then around about that time in the New York Open it will retrace a little, and then Chicago will often pick up that trend again. So this point is where you can assume that we're going to be short for the day. This was not a very good trading opportunity because it fell so quickly and then consolidated, so you wouldn't have had that many chances to get a good trade there. But if you look, this is a good example. This might not actually have been the low of the day, so that's not a good example. So this one has took a lot longer to retrace, but once it has, and once it's broke the low, it has then used that low as resistance and it's fell. And this was probably just short of 100 pips if you got, obviously if you got the perfect move. This is easy, 50 pips or so retest here. You can sell and you can target just there, for example, it's 40 pips. But I'm just picking pairs totally at random here, looking for examples. Nothing here has been pre-planned. So this is a perfect example of what I was just saying. We've come down, and here at about 11 o'clock, 12 o'clock, we started to stall out on that move down. New York's brought it back a little bit, and then it's started to fall again. It's been a consolidation more than a fall, but it has started to fall again. This is almost a perfect example. We went up into 11 o'clock, 12 o'clock, we started to come down, consolidated, made the new high right there, and you see this would have been an ideal opportunity to get long, and you've got 30 pips. No, we've just done a yen pair, so this will probably be quite similar. So this is a nice pattern you can look for, with London being the high or low of the day, there being a pullback around about just a couple of hours before the New York market opens, and then quite often it's at 3 p.m. GMT when the Chicago market opens that you're going to see the daily trend continue again. We have a very specific set of rules on how we can very accurately pick our targets and stop loss for when this happens, and that training is available for $30. I think what Maria has done is the first 100 people who buy it will get it half price for $15, and after that it goes up to $30. Now, to borrow a phrase that Maria likes to say a lot, if this information does not make you more than $30 over your trading career, then I'll drink the sea, because this is very, very useful information. It works around about 30% of the days, and on the days your success ratio of winning trades is going to be 60, 70, 80%, and this is always traded at a 1-to-1 risk reward ratio or better, so it's a very profitable system to know. I hope you have enjoyed this video. I hope it has been educational for you. Go over to $5signals.com where there are other blogs with very useful information. There's some forum posts, and if you want to subscribe to the Signal service, it only costs you $5 a week, and that's very, very good value. I strongly suggest you check it out. All the best in your trading. Until next time, goodbye.